Welcome to unit number 12. Now, in unit number 12, it talks about purchase and purchase return day book. Remember, from unit number 1 and 2, we have seen that there are a number of day books. So purchase day book and purchase return day book, they are books of prime entry. So we are going to look at these two books of prime entry. Now we shall do the same. What I mean by doing the same is we have already looked at sales day book and sales return day book. They affect customers. Now we are going to change our focus to suppliers. The sales day book and sales return, they deal with customer invoices. So we are now changing and going to undertake the same process we did in topic number 10 and 11, but the mirror of it. We are going to look at suppliers. So which subtopics are we going to look at in this chapter? Number 1, what is a purchase day book? Number 2, what is a purchase return day book? Number 3, how do we enter transactions in these two day books? And number 4, coding. Remember, coding has been affecting all the other chapters. So in coding, I may not explain much in it because I've already explained codes in almost each of the chapters. So coding, every transaction, every customer, every supplier must be given a unique identifier, especially now that we are dealing with suppliers. Every supplier must have a unique identifier, which is called a code, and posting the day book totals. Purchase day book, if we start with that. In a purchase day book, these entries are recorded in a purchase day book when we have what we call credit purchases, when we buy goods in credit. It's the opposite on when we sell in credit. So when you sell in credit, we post in a sales day book. When we purchase in credit, we post in a purchase day book. So if there are any invoices from the supplier, we post them in a purchase day book, which is a book of original entry. An example, it's exactly the same as sales day book, but now it's dealing with suppliers. So there should be a date, there should be a supplier name, of course the reference number must be there, supplier account number, total before VAT, and the gross amount after VAT. And then, of course, you will get the totals. Purchase return day book is now a debit note on the invoices from the suppliers. So here we are trying to say, but if we are dealing with suppliers, we still call it a credit note. So the purchase return day book lists the credit notes received when the goods are returned to suppliers. When we buy goods from suppliers and then maybe some are faulty and we take them back to suppliers, we record them in a purchase return day book, which is also a book of original entry. Entering purchase transactions in the day book. Remember, in the day book, we post individual entries on a daily basis. All purchases from suppliers, we record them on a daily basis. So an expense day book may be kept to record expense purchases as distinct from purchase for inventory. This point means that we have purchase of stock or purchase of good. That is what is commonly posted in a day book. But purchases of other expenses, what we incur on other expenses, can also be separately kept in a day book as distinct, as separate from purchase of inventory. Alternatively, all purchases of goods and services may be recorded in the same place, but each must be having a clear explanation that this is purchase of a certain expense and this is purchase of goods. So purchases and expenses may be analyzed into different categories. What have we said about coding? Coding, remember this unit is brief because we have already looked at unit number 10, which was talking of sales and sales return daybook. So this is just a mirror. This topic mirrors topic number 10. So, but it's a mirror. It's the opposite posting. If we were debiting topic number 10, now we are crediting topic number 10. If we were crediting topic number 10, now we are debiting topic number 12. So, coding, invoices are received from suppliers and will have their own unique reference numbers based on suppliers' accounting systems. Posting in the day books, totals. So once we have the totals of the day book, remember there is a total that is net of tax, there's the tax, and there is the gross of tax. The total gross is the amount that we will later on see in chapter number 13, which will go in the purchase ledger or payables ledger. The gross total is what we will transfer in the purchase ledger. Now, the day book totals for purchases and purchase returns are posted to the general ledger, totals payable, I've explained that, the VAT control account, and the relevant purchase and expense accounts. Expenses accounts will include capital expenditure as well as recording for business expenses such as administrative expenses. The amount owed to the individual suppliers are entered in the payables ledger personal account. An example. Now, we have here an example. The following invoices in respect of purchases of goods for resale have been received. So all these are in respect of purchase of goods for resale. So rule up the purchase day book and enter the above invoices. Total the day books for the month. So here we'll just have a simple illustration of a purchase day book. A simple illustration of a purchase day book. Now, if they've just simply given you amounts like that, you assume the amounts are gross. So if amounts have just been provided the way they have been provided there, you assume they are gross. So I'll have date, I'll have details, I'll have the reference or folio, and then I'll have the amount. So we just quickly post the dates. So there is the 2nd January, there is the 10th January, we have 14th January, 18th January, 25th January, 28th January, and 30th January. So the first one was today's star. And we can assume reference number 1. We just give it a reference number. The second one was to Moonlight. Moonlight was our second supplier. We assume it's reference number 2. The third one was to Kosi, reference number 3. There was Daystar again, reference number 4. There is Moonlight again, Moonlight as our 5th reference, Daystar. So remember, we post it on a daily basis, and Cozy. And then you get the amounts, 85,122,600, 91, 200, 100, 900, so 6, 7, 100, 900, 46, 100, 22, 700, and 101, 300. And you are asked also to total the day books. So, yes, I recall that, so I can continue. Okay. Okay, fine. So now we have posted the entries. Now we were to get the totals of the entries. So the totals of the entries in the day book. So there is 85,000 plus 122,600 plus 91,200 plus 100,900 plus 46,100 plus 22,700 plus 101,300. So that gives us 569,800. Remember, these entries will be taken to the ledger accounts. So there will be a ledger account for Daystar, there will be a ledger account for Moon, and there will be a ledger account for Cozy. We will look at that in the next chapter. Example 2, the same concept or the same logic in example 2. Now, Thomas, a sole trader, has the following purchases and sales on credit for the month of February. So purchase, these will go to purchase day book, sales day book, purchase day book, sales day book, sales day book. So enter the above the transactions in the purchase day book and sales day book. So it's just a repetition of these. So if this is our purchase day book, you identify which transactions relate to purchases. So there is number 1, this, there is that, and so there are 3 transactions that relate to transaction on the 1st February, 4th February, and 12th February. So 62, 79, and 67. And then you get the total. You just follow exactly this format. So there will be a total for purchases. It will total up to 62 plus 79 plus 67. There will be a total for sales, which we had already looked at in topic number 10, 47, 59, and 44. And then you get the total of each case. For example, the purchase will be 62,000 plus 79,000 plus 67,000. So the total purchase day book will be 208,000. The total sales day book will be 47,000 plus 47 plus 59, 59,000 plus 44,000. So that will give us 150,000. The next examples now are practice questions. So Jonathan sends a debit note to one of his suppliers. In which of Jonathan's books of prime entry will this be recorded? Of course, that is a purchase return because it's a debit note. A debit note reduces the invoice you received from suppliers when goods have been returned. So answer is D. The next question. A firm has a credit facility with a local trader. An invoice for purchases has been credited to the supplier's account and debited to the sales account. This is a wrong entry. So credited to supplier's account and debited to sales account. Remember, in sales, ideally in sales account, we should credit. But we credit if it is sales, not purchases. A firm has a credit facility with a local supplier. A local supplier, that is a purchase. It's not a sales. So which one of the following journal entries will correct this error? So in this case, we must post the correct entry, which is to debit purchases. And you will now correct the mistake that was made in the sales account. Sales account will be debited. So we will remove the sales by crediting the sales. So you will debit purchases and credit sales. Why do we credit sales? Because we are canceling this debit entry which went to sales. It was not a sales transaction. It was a supplier. It was purchases. Question number 3. Which one of the following statements are true about a good coding system for financial transactions? Which is true about? It enables a company to easily extract data for management analysis. It's true. Coding helps management extract data. It provides a unique code for each item within the system. Yes, it provides a unique identifier. Number 3, it provides codes that are uniform in format. Codes must be uniform. That is correct. And it requires management authorization before creation of a new code. Every new code must get authorization or approval. So all of them are correct, and the correct answer is D. Question number 4. Which one of the following is the correct posting for the purchase day book to the general ledger? Which is the correct posting of the purchase day book to the general ledger? A, purchase account and credit payables ledger. That's correct. You should debit purchase account. Whenever there is purchases, you should debit purchase account. Okay? N buys goods from Jamal for 2,500. He returns half of these goods on 15th May. So he buys goods of these and half of the goods have been returned. So there is a debit note from the company. Which of the following documents would be issued by Jamal for the return of goods? Would be issued by... Okay, so it depends on who. The supplier issues a credit note, but as the business, we issue a debit note. So who? Which one of the following would be issued by Jamal? Jamal is the supplier, so it will be a credit note. But if it was Navinda, it could have been a debit note. To Navinda, it's a debit note. To Jamal, they issue a credit note. So answer is B. Next, question number 6. Maleni is a VAT registered trader. Her purchase day book shows purchases of 2,000, net of VAT 18%. What is the double entry with Malene post at the end of a day? So you get 18% of 2,000 because it was net. If it was gross, we could have used 18 over 118. But because it's net, it's 18 over 100 times 2,000. That is 36 or 360. So 360, we look for transaction that has got 360 as VAT. So debit VAT, debit purchases 2,000, debit VAT 18% of 2,000, that is 360. So purchases 2,000, payables, there is VAT which is missing. VAT is missing. There is VAT, but oh yeah, it's this. So 2,000 debit, purchase, debit, VAT, and credit, payables. The next question, the following statements relate to the aged payables analysis. It provides information about debt collection efficiency. No, aged analysis does not provide information on efficiency. It identifies when payments are due to be made to suppliers. Yes, it helps identify when payments are due. So the correct answer is that. Practice question number 8, which is the last question. Which of the following are books of prime entry? We have already covered this over and over. General ledger, no. We have purchase day book. We have sales return day book. We have journal. So we have 2, 3, and 4. Answer is C. And that brings us, it was a short topic, on preparation of purchase day book and sales day book. Now, once these day books have been prepared, they will now be posted to the ledger. So our next topic is going to cover purchase ledger accounts. Thank you. Welcome to unit number 13. In unit number 13, we are now going to look at purchases ledger. It's a short unit because we have already covered sales ledger. So it's a mirror of sales ledger. Remember, purchase ledger or even sales ledger, which we had already covered, they are individual personal accounts. Every supplier must have his own ledger in our records in the business. So every supplier, it's a personal account, individual account for each supplier that we have in the business. So what are we going to look at in this? So just as a customer accounts are maintained in the receivables ledger, so are suppliers accounts managed in the payables. So it's just a complete mirror of what we covered in the sales ledger. So there are 4 areas we are going to focus on in a few minutes. Number 1, personal accounts for suppliers. How do we open the personal accounts? Recording transactions in the suppliers or payables ledger, payments to suppliers, and the age analysis of suppliers or of payables. Now, personal accounts of suppliers are recorded in what we call payables ledger. Remember, we have just looked at the purchase day book and purchase return day book. So from the purchase day book and purchase return day book and cash book, we can prepare a payables ledger or purchases ledger. So the payables ledger contains the personal accounts of suppliers of the business. Suppliers' personal accounts provide the business with a full record of how much is owed to each supplier. Why is it important to have personal accounts? There are 4 key reasons. Number 1, a supplier can call you to find out what is the total that they owe you, that you owe them. So a supplier might telephone asking for payments of the full amount which is due to them. So if the supplier calls you, you must have a record where you confirm the amount the supplier is saying. You just don't rely on the amount the supplier is saying and make payment. You must verify from your records how much is to be paid to the supplier. That's the first reason. The second reason, the business needs to maintain its own records of how much it owes different suppliers so that it can check that the supplier's statement is correct. Remember, the supplier sends you a statement. You must now be in a position to have your own records to enable you compare supplier's statement to your own record. That's the second reason of having this ledger. Number 3, so that it can make appropriate payments on a appropriate regular basis to suppliers. So the business needs to maintain a complete record of items to enable them make payment to suppliers. And the last reason, the business will not usually want to pay each supplier invoice separately. Sometimes we need to accumulate these so that we know on a monthly basis what amount will we pay supplier in the first month, in the second month, in the third month, etc. So those are the 4 key reasons of having this ledger. Just like in the sales ledger, remember, so now we are looking at purchases ledger. So whenever there is credit purchases, we post it on the credit side. And then if there is purchase returns, we post it on the debit side. If there is the cash paid to the suppliers, we post it on the credit. So you'll have to get the total of the debit and the total of the credit. Of course, the total of the credit will be more than the total of the debit. And then you'll have to get the balance carried down at the end of the day to show you what is owed to suppliers. To show you what is owed to suppliers at the end of the month. So, recording transactions in a payables ledger. How do you record transactions in a payables ledger? What I've just shown. Recording transactions in a payables ledger, you need such an account. On the credit side, you post credit purchases, and then you have purchase returns, cash paid, and these will enable you know how much you have not yet paid by the end of the month. So a supplier account in the payables ledger will normally show a credit what? Balance, because it will be a credit balance. So at any given time, this side will be more. Next. So payments to suppliers. Just like customers, suppliers now need to be paid. We receive money from customers, but in suppliers, money goes out. So payments to suppliers should be organized according to periodic procedures of the business. Checks and authorizations are necessary in order to ensure that only valid payments are made. Payment methods vary, and the checks necessary will differ according to the payment methods used. Finally, the age analysis of payables. It's the same as the age analysis of receivables. It's a record. The age analysis of payables shows the age profile of suppliers. Remember, the other one was the age profile of customers. Now it's the age. The other details remain the same. The age analysis of payables will consist of the listing of payables balances analyzed between different ages of the debts represented by different items in the balances measured in months. So maybe there are those suppliers due in 30 days, 60 days, 90 days, etc. We have now practice questions in these. How will a payables ledger account appear in the financial statements? Remember, receivables was an asset. So payables will be a liability in the balance sheet, and specifically a current liability. So it is a liability. Asset is when it's a receivable. An item in revenue, that's not right. Okay, next question. So answer is B. Question number 2. Why is a personal account for a supplier kept? What is the reason for keeping a supplier's account? A, to facilitate payments to receivables? No. Receivables, we don't pay receivables. We receive money from receivables. That's wrong. So to ensure that the accounts are paid in full, that's not the reason of keeping this account. Number C, to check the amount due agrees to the statement received from supplier before you make any payment. So answer is C. The next question, question number 3. Which of the following could create a debit balance on an account of a payables? Which will create a debit balance? And a payment to a supplier, that will still be a credit balance. And a payment number 2, a duplicate payment to a supplier. Yes, when you pay supplier double or twice, it will cause what? A debit balance. So answer is B. C. Trade discounts, this will still be a credit. And an overcharge of supplier's invoice, it will not be reflected in this. So the answer is duplicate. Question number 3, number 4 rather. If a purchase return of 48,000 has been wrongly posted to the debit of the sales return. So it was a purchase return, but it has been posted on the debit of the sales return. Debit of the sales return. Okay? But has been correctly entered in the supplier's account. Total of the trial balance will show, now get it right. A purchase return has been wrongly posted on the debit side of a sales return. So it has been posted on the debit side of the sales return. So we were supposed to be ideally posting it this side, but it has been posted this side. So here we have wrongly posted it there, yet it was. So which means this side has been understated by 48,000, and this side has been overstated by 48,000. So this is under. This went down by 48. This went up by 48. So the difference between these is 96. So the debit side is overstated. So the debit side is overstated by 96. Is there overstating by 96? Yeah. The debit side has been overstated by 96 because the debit was overstated by 46 and credit was understated by that. So this has gone up by 48, this has gone down by 48. So the difference there, if you project a number line, is 96. The last question. Which one of the following appears on the, okay, not really the last question. Which one of the following appears on the credit side of a purchase ledger control account? Credit side, purchases and other. Of course, we had seen a ledger previously. Here. So, which one of the following appears on the credit side of a purchase ledger? Purchases. Cash paid appears on the credit. If there is any discount received, it appears there. If there is return outwards, also purchase return is the return outwards. So the correct answer is A. The correct answer is A. Let's go to the next. Question number 6. In a payables ledger, B has a debit balance. In a payables ledger, B has a debit balance. How could these have arisen? As a result of overpayment of goods. When you overpay goods, of course, it automatically leads to a debit balance. So overpayment is C. Next question. Question 7. The year-end balance of Fatima's payables control account is 3,525,000. What does this mean? Suppliers owe Fatima 35.25. No. We are the ones who owe Fatima. Sorry, we are the one who owe suppliers, not Fatima. Fatima is our business. So suppliers owe Fatima? No. It's Fatima who owes suppliers. Fatima owes 3 million to? Yes. It's Fatima who owes 3,525,000. Fatima made cash purchases of that. It may be true or more. They may have made more purchases. It just means that the balance we owe Fatima is 3,500,000. So answer is B. The last question. Rivano has a balance of 350 on its payables ledger control account at the end of May. What does this mean? As a balance of 350 on its payable ledger control account at the end of May. It means that they owe, the balance they have not yet paid is 350. So it owes 350 to its what? Suppliers. So if there is a balance of that, they have made some payments and what they have not paid is 350. Answer is C. This was a short unit because it's a mirror of what we had covered in chapter number 11, which was the sales ledger. But this chapter was on payables or purchases ledger. That brings us to the end of this chapter on payables ledger or purchases ledger. Thank you.